Welcome back to Modern Finance, your one-stop destination for all the latest updates and analysis on the world of cryptocurrencies. Today's episode will be discussing how Bitcoin might hit the level of 30K in only 4 weeks. So stay tuned. But first, I would have to say that opinions vary on BTC price strength, with Bloomberg Intelligence warning that 25K may stay in place as a major resistance. Bitcoin, currently trading at $23,503, sought to end the week above 23,000 into the February 26th close. This was happening as concern heightened over stubborn resistance. What you're seeing is the BTC USD 1-hour candle chart. There's still hope for BTC reaching 30K. Data from Cointelegraph Markets Pro and TradingView showed that BTC/USD has reached $23,318 on the day, up $600 from its weekend lows. The latest move marked a modest comeback after a grim week for risk assets, with United States equities suffering thanks to above-expected inflation data. Despite this, Bitcoin still remained below levels flagged by analysts as important to reclaim before the end of the month. Only isolated voices remained optimistic, this including popular trader Kaleo, who maintained that $30,000 remained as a BTC price magnet. Crypto trader Altcoin Sherpa, meanwhile, offered a reference period for hitting the $30,000 mark, which is 4 to 6 weeks. As you can see here. In addition to this narrative, another trader and analyst called Max continued to say, BTC is still in a transition from bear to bull. Up only begins once the neckline is broke. On the other hand, Mike McGlone, senior macro strategist at Bloomberg Intelligence, voiced misgivings about bull's ability to overcome the $25,000 resistance level. He wrote in a Twitter summary of new research the following text. Headwinds remain strong, markets have bounced. Don't fight the Fed was the dominant headwind for markets in 2022 and remains so in Q1. Bitcoin 25,000 resistance level may prove significant for all risk assets. The research itself predicted that the more tactically oriented are likely to focus on responsive selling when it comes to BTC USD, while it may be a while before buy and hold types gain the upper hand. The week prior, hopes remained high that 25,000 would not pose a major hurdle and that BTC USD would be able to dispatch it without too much effort. In the event, however, the magnitude of the task became apparent. In addition to asks on exchange order books, key moving averages, MAs, lay above, notably Bitcoin's 50-week and 200-week trend lines, as you can see in the screenshot right here, being the red line, the 50-week MA, and the blue one, the 200-week MA. To conclude this part, the declining 50-week MA itself led McGlone to conclude that the trend remains downward. The cryptocurrency markets and the United States equity markets witnessed profit booking this week as the macroeconomic data hinted toward continued rate hikes by the Federal Reserve. Bitcoin is down more than 4% and the S&P 500 fell 2.7%. to record its worst week of the year. The CME FedWatch tool shows a 73% probability of a 25 basis points rate hike by the Fed in the March meeting, but after the hotter than expected inflation readings in 2 weeks, the probability of a 50 basis points rate hike has started to slowly gain traction. During periods of uncertainty, some coins enter a deeper correction while few buck the trend and continue to outperform. Hence, it becomes important to select the right coins to trade. Well, that's all for today. Thank you for watching and see you in the next one.